Hello traders, welcome back to the channel. My name is Hosanna. If you're new here, and of course I help traders get profitable and confident in the markets. All right, so of course in today's episode we're going to be talking about how to grow a small forex trading account. Now the truth of the matter is that every single one of us, when we start small. We start with a small trading account, and of course we have these dreams of turning those accounts into big accounts. And if that is you, if that is what you want to do, if that's what you want to achieve, in this video I'm going to actually tell you a complete step-by-step process to how you are going to actually be able to do this. Now if you're going to be able to do this, you need to watch this video all the way to the end. You need to be patient enough to watch this video all the way to the end so that you don't miss out on any of the gems that I will be dropping in this video that will absolutely help you accelerate your growth as a trader. So let's dive into it. Now, the first thing you need to do is that you need to understand that it is not going to happen overnight. If it is a small account you're trying to grow, you need to understand that it is not going to be an overnight thing and is actually a long-term process, or it's actually a long-term project that you've just landed yourself in or that you are aiming to achieve. So if you know that it's a long-term project that you're aiming to, achieve, and it's a long-term thing you're approaching, it simply goes a long way to tell you that you need to actually be patient with the entire thing. You cannot be aiming for a long-term growth, and of course you are trying to do things that give immediate or instant gratification going forward. So the idea is to actually have a long-term view, to have a long-term approach, and to think long-term in the process of growing a small account, because what you're trying to do is to grow a small account, not to the way they say you're trying to turn it into an overnight success. No, it's not an overnight success. You are trying to actually grow the account, and growth is gradual, growth is incremental, and growth actually takes time, and you must give yourself and that account time to grow. So that's actually the first thing. You must think long term, and you must give the account time to grow, and of course you must give yourself time to actually develop as a trader as well while you are trading that account. Now I must tell you, on the second one, I must tell you that it is actually more stressful to trade a small account than to trade a large account. Yeah, I know a large account comes with stress, but on a large account, you're likely to be more relaxed. You could even under risk, you can even, go in with a lot less risk. But on a small account, 100, 200, even $1,000, it is actually very stressful to actually trade small accounts as a trader. The reason it's stressful to trade small accounts as a trader is that, to manage risk on a small account, on a $100,000 account, you could easily say you're risking 1 or 2% per trade. But on a $100 account, it is not going to be easy to risk 1 or 2% per trade, because how did you even adjust the risk in such a way that you are risking only $1 per trade on a $100 account, or $2 per trade on a $200 account? So it is more stressful to trade a small account. But if the account you're trading is a sizable one, let's say $500 to $1,000, you can find a way around it and stick to at least 1 to 2% risk per trade. So the idea here is to actually stay consistent with risk in the long run. I know these things are very easy to say, but of course, as you get into the trading and you start to see things in the market, there's a very good chance that your emotions could get in the way. And this is where you need to actually trade with risk management and begin to exercise proper emotional control. You must be in absolute control of your emotions, because a lot of times, 4 trades in a row that are losses, 4 losing trades in a row, 5 losing trades in a row can happen to any competent trader. It doesn't matter how good you are, it doesn't matter how you trade, but you could have 4 losses in a row. And let's say you have 4 losses in a row, have 1 winning trade, and then go on to have another 4 losses in a row. This is a probability, this is a distribution that can easily happen. And the moment that happens, there's a very good chance that the trader could, begin to question the strategy, could begin to question himself, could begin to question a whole lot of things. And this is where the emotions really get the best of the trader. And I encourage you, of course, if you're doing these kind of things, like I said, you need to be in a community and you need to be around people. You need to always talk to people, and you need to be sure that you are not trying to do this by yourself. And that is actually one of the key ways to actually manage your emotions and actually regulate your feelings in the market, because the market has a tendency to make you very, very emotional. Absolutely emotional. The market can do that to you. So if you look at yourself and find out that you are trading that you are panicking too much in a trade, or that you are becoming too afraid, then there's a very good chance that you might have thrown risk management out of the window and you are trading too heavy on a particular trade. And that's one of the things that can actually cause you to panic within a trade. So while you're at it, brokers tend to offer you high leverage. There are lots and lots of high leverages all over the place. You see 1 to 100, 1 to 500, all of these leverages all over the place. While they are there on the brokerage, I encourage you to not use them. Please do not use heavy leverage on your account, because if you use heavy leverage on your account, that becomes a problem. On the third approach, I will encourage you to develop a very good trading strategy, develop a very good trading system, stick to one or two pairs, and if you're trading one or two pairs, or, if you're trading majors, for instance, I mostly trade the dollar majors. I'm trading AUD, Euro, Pound, Aussie, Kiwi. I mean, I've mentioned those things. I've mentioned the New Zealand dollar, CAD, Swiss franc, and very rarely the yen. So I'm trading mostly the major pairs. All right. So if you're going to stick to the major pairs, then it makes sense to stick to the major pairs, or one or two major pairs. Or if you choose to trade everything in the market, well, you're trying to grow a small account. So I will encourage you not to do that. But the idea is to actually master your strategy and master what you are going to be trading. And that also brings me to narrowing down how you are going to trade. By narrowing down how you are going to trade, I mean, are you going to be a scalper, or you're going to be a swing trader? Now, if you're a scalper, it means you're going to be going in and out of the markets, quite often. That could be really stressful. And that's why for someone like me, I like to swing trade. I prefer to be in the market over a long period of time. I prefer to hold the trade a week, 2 weeks. I prefer to, hold the trade that long. That's how I prefer to trade, because that takes away the stress for me. It takes away, having the need to actually run and look at the PC. You're looking at the chart you're looking at the chart every now and then, that kind of thing. So I don't like the stress that comes with having to look at the chart every time, or having to look at every price swing, every profit move. I don't like the stress that brings me at all. So I prefer to actually just go in small risk, or going with my risk, and just put the stop loss, put the take profit, and then I get away from the PC, and I don't bother to look at it to see what is going on. In fact, I don't even have the MT4 and MT5 on my phone. That's a different video for a different day. But I prefer to swing and just let it run, and that is very healthy for a small account. It's very healthy for allowing the account to grow over time. Now, the next thing is you need to absolutely learn to compound the account. This might be, in fact, every point is important, but you need to absolutely learn to compound the account. Compounding the account means as you make profit on the account, you need to let the profit stay in the account. And another thing is, you need to think about this. As you make profit on the account and see that the account is growing, you need to actually inject capital into that account. You need to keep reinjecting capital into the account. Now, we're hoping that the reason you're not reinjecting capital is because you're blowing up the account. Now, as you inject capital into an account that you are trading, as the account grows, you add capital. As the account grows, you add capital. And of course, even if the account is coming down, you need to also reinject capital into the account. But as you're trying to grow an account, and you see, let's say you've taken the account from $200, now it's at $300, or from $300 now it's at $400, and you for some reason you think now is the time to make some withdrawals. No, it's not the time to make some withdrawals. You need to actually, if you have funds coming in from other businesses or from other sources, you need to take funds from there and add to the account. And as you add to the account, a time is going to come when the account is going to be big enough to generate the profits that will actually pay you. So that is how you want to actually have, that's the kind of approach you really, really need to have going forward in a very small trading account. So on the bonus side of it, of course, I've talked about avoiding over trading. I've talked about risk management. I've talked about compounding. And another thing is, now we have prop firms among us. The prop firms are here, and hopefully we hope that they're going to be here for the future. We hope that going into the future, that regulators are not going to come and take away the prop firm, just like they took away my forex funds from us. And I mean, they were doing a lot of shady things under the ground, but of course they were still paying people. They paid me. So you can always say, oh, the prop firms have their issues and all of those things, but prop firms are here to be a vehicle and a tool for you to actually use to build your personal account. So like I was saying earlier, so if you're trading your small account and growing your small account, it also makes the most sense that funds that come into you from other sources, maybe prop firms, you also take those funds and you inject into the personal account. That helps you in a long way, because the truth of the matter is that on a personal account, you are far more relaxed trading compared to a prop firm. On a prop firm, you're thinking about your risk, your daily drawdown, you're thinking about your daily risk, you're thinking about this, you're thinking about so many things. And then one of the things you're thinking about is, oh, what if you lose this fund? What if you lose this account? What if something happens? What if they don't pay you? A lot of what ifs that happens with prop firms. But on your personal account, it is between you and your broker. If your broker is a good broker that is going to pay you out when you want to make a withdrawal, then that is absolutely a fantastic thing for you. That's really all you need to worry about. Of course, and as long as your broker is not trying to manipulate your trades and all of those things, but that is very good for you. So the idea is, you have a prop firm. As you trade and generate profits on the side, you want to take those profits that you're generating on the side and you want to inject it into your personal account. So these are my tips for you growing a small account, and I hope this has absolutely been helpful for you. Now, of course, if you made this far, I want to invite you to join our free Telegram community, and of course, I also want to invite you to check out our website chiquadotrading.com. We have the Absolute Beginner series going on right now, and you can equally join and watch that from and learn from anywhere in the world. Of course, we have an online session as well. As we are running the class physically, we equally have the online session running concurrently as well. So you have an opportunity to do that. So just go to chiquadotrading.com, check out our website, see what we have there. You can join our community, and we can't wait to have you on the inside. So please make sure you like, share, and subscribe, and I will see you on the next one. Cheers. So on the final thoughts, growing a small account takes discipline and of course a lot of consistency, and you need to actually compound the account, and you need time and patience to be able to grow the account. Of course, if you made it this far, it obviously shows that you already have what it takes to grow a small account. You have the patience and discipline it requires to grow a small account. So please, whatever account you have, trust me, believe in that. You can actually do it. You can actually grow the account. And then one more thing is, like, share, and subscribe. We're looking to hit 3,000 subscribers before the end of the year. So please help us reach that number, 3,000 subscribers. It sounds small, but for us, it's actually big in the channel. So please help us hit that number, and, like, share, and subscribe. If you have any comments, any observations, are you trading a small account? How are you getting by? How are you getting on? Please share them with us in the comment. And of course, if you have any video recommendations, if you have any videos, suggestions that you would like us to touch on, please share those suggestions with us in the comments, and you'll be surprised that a video you suggested will be coming to the channel. So I wish you good luck and good trading in the markets. Trade safe.